Let me just give some of the stats. If you can have this here, 16th largest bank, 97% of the money at Silicon Valley Bank is not protected by FDIC. I've seen 93%. I've seen 97%. Whoever's right, one of the two. Either way, it's a lot of money. 12 days ago, like 13 days ago, the CEO, Gregory Becker, sold 11% of his shares. Daniel Beck, the CFO, sold 32% of his holdings. CMO Michelle Draper sold 28% of her holdings, around $5.1 million. If you post a picture of Forbes just 7 days ago.
This one right here.
By the way, they took the tweet down, just so you know. That's the one I posted, but they took it down. It just go to the picture I sent you. It's another one of those pictures I sent you, Rob, that should be on your phone. Go one more. Right there. Look at this. This is their tweet. This is 6 days ago. Proud to be on Forbes' annual ranking of America's best banks for the 5th straight year, and to also have been named the publication inaugural Financial All-Stars list. They tweeted this. I retweeted this. They took it down because they obviously, I'm sure a lot of people were retweeting this. This was all over the place. They don't want people to see. Just 5 days ago, you're bragging about this. So this becomes the question. There's a terminology called front running, right? You know what front running is. If you can pull up the definition of front running, let's just read the exact definition. The practice by market makers of dealing on advanced information provided by their brokers and investment analysis before their clients have been given the information. Okay, this is if an investor does this. What's worse is when you're in it, you're the guy that knows what's about to happen and you do it. Isn't this a crime, Tom, to do something like this?
I'm on that page. I like to see an investigation. I'll tell you why. I am right here with Barry. By the way, great to see you today, guys.
See you, brother.
Is on March 1st, Becker was at an event in Los Angeles, and he said, we pride ourselves on being the best financial partner in the most challenging times. He said that, but he said that and then was heading to London, where he was going to go get a Bank of the Year honor at this London deal on the 2nd. It gets better. He had already been told that there was a call coming from Moody's. Moody's had looked at a footnote that was in there. Because remember, they don't have to disclose everything in Standard Poor's page that they had the $15 billion. Moody's saw that and came back and said, hey, we have a question. If you were to look at this as a mark to market rather than a mark to maturity, where are you at here? Because our assessment is we're going to lower you 2 ratings levels, Pat. 2. And he said, what do we have to do? You have to clean this up. And part of the plan to clean it up, exactly as Barry just said, sell $20 billion of it, but technically that's depositor money. That was depositor money you put in the bonds. Now you have to sell the bonds you're short. And then you have to cover the hole, it's called. Well, how do you cover the hole? Tell you what, we'll call some of our favorite venture capitalists and we'll issue some stock. Even though they were already down from 725 to 325, down 400 points in the preceding 12 months. And they're going to dilute that kind of a down. And so they went out to dilute it. But now we all know what happened. The bank run started. General Atlantic, I think, was the VC that backed out on the $500 million.
They were getting advice. They were getting advice from Goldman Sachs, which was really bad advice the whole way down. And in fact, the management had changed. They became very, very smug. It used to be a great bank, but then they were like, they thought they were too good for themselves. They didn't try to endear themselves to any potential investors or venture capitalists. They were like, they were not friendly to the environment, so nobody wanted to invest with them.
But to Pat's point about front running, you freaking know that you have footnoted your earnings report, Pat. He knew he footnoted it, and he knew that Moody's was in the lobby saying, we got to talk and we may take you down 2 ratings levels, and yet he did this. I'm with Pat. I think there should be a deeper investigation on this.
This term front running, I've never heard this term, but we've all heard the term insider trading, and I Googled front running versus insider trading, and it's actually the same thing. It says front running is similar to insider trading with the minor difference in this case that the broker works for the client's brokerage rather than inside the client's business. So it's a form of insider trading is what front runner is.
But this is even worse though. Like what Nancy Pelosi and her husband get, accused of is insider trading. What a lot of these Congress people, how are you worth $140 million on a $160,000 salary? Okay, that could be insider trading. Dude, you're on the inside. You know exactly what's going on. The level of audacity to go up there and collect it and then come back and say, hey, we got the Bank of the Year. Hey, guys, sell off because this is $13 billion. Let's do it quickly. Look what's happening over. And then now it's leading into where we are today. And by the way, when you look at their backgrounds, of what they did. Just kind of want to give you a background of what they did. The CEO was a director at San Francisco Fed. The CFO was a former analyst at Freddie Mac. The chief administrative officer, which you guys were kind of putting up, he was a former CFO of Lehman Brothers. The chief risk officer led credit ratings in 2007. The chief legal officer was general counsel at Citibank in 2008. So to say they have a star-studded lineup of people with experience to make sure a company doesn't make the mistake that Lehman Brothers made or others made, they haven't. And they still did this. Before we go into the question that I want you to give your feedback on, I want to talk